So first up, let's talk markets. Rajesh Bhatia, as promised, joins us on the show. He's the Managing Director and CIO at ITI Long Short Equity Fund. Rajesh, this is Rima here, and thank you very much for joining in. For the last few weeks, we've been talking about the rising risk to the markets because of what's happening in the commodities. Oil was at $120 per barrel. It's now slipped. But still, commodities on the whole are trading at elevated levels. We've seen rate increases. The fear is we could see 6, 7 more rate hikes by the Federal Reserve. Despite that, the markets have only fallen 2,000 points from the all-time high levels. The all-time high levels was 18,600, and now we're at 17,600. So what explains that, according to you?
Yeah, no, you're absolutely right, Rima. In fact, we should be lucky that India is among the few importing commodities countries that has done well. If you look at around the world, the markets that have done well are really commodity exporting countries. So we are fairly lucky to kind of be there. Having said that, you're absolutely right. I think the macro risk, if you were to follow the news flow, which is the change in monetary policy, which has really been the key reason why equity markets have done well. There is so much kind of apprehension about where that is heading. In spite of that, equity markets, not only in India but globally, have held out quite well. I would think that that's a matter of really a TINA factor. There is no alternative. Fixed income is bleeding even more, and you don't want to own cash. At this moment, and that is true for the rest of the world, and that's true for India as well. In fact, if you notice, this March, we've had 28,000 crores of flows to the domestic mutual fund markets, to equities. So, given that perspective, I think the flows are still coming to equities, and in spite of the great macro risks that are lurking, equity markets are doing well.
All right. Hi, Rajesh.
I hope this is not phase one. Maybe this is phase one, and a lot more has to happen, as things kind of pan out over the future.
But there is interest rates could rise in India as well, Rajesh. So that means another alternate asset class emerges to the investing population. Is that a risk?
Certainly, I think this is really going to be a year of uncertainty. Where is inflation headed? Maybe the most important question to answer. But I don't think it's an easy question to answer, honestly. So I think everybody, there is no forecast that you should kind of believe, but this is really a period of high uncertainty for the next 12 months or so. I think the best way to approach the markets from here on is really a more tactical strategy.
Okay, we take that point. Rajesh, good morning. Thanks for joining us. This is Pavitra. Since we have you with us on the day when Q4 earnings are kick-starting, let me ask you about the IT pack. Overall, we are expecting this to be, a quarter of slower growth. There are all of the problems that persist on the margin front that we have been talking about for a while now. What is your call on this entire IT sector? Do you think this margin challenge is likely to sort of last for a little bit longer? And then in that scenario, how do you approach this space?
So for us, calendar year 20 and 21 were the largest, IT was the largest overweight for our portfolio. Having said that, in this last quarter, we have taken some money off the IT table. And the reason for that is that we feel that, with CPI at 7.8% or thereabouts in America, I think you're going to see wage pressure in the US as well. And of course, there is this 2-year, 10-year inversion that a lot of people keep talking about, which means that there is some fear of recession in the US in case the Fed were to increase interest rates quite sharply. Of course, those will be tailwinds headwinds for the IT sector as we move forward. Having said that, we are fairly comfortable or confident that, while there may be a wage pressure in the next few quarters, I think the pricing pressure, given that demand is so strong for Indian IT, that they will be able to accommodate those cost increases as you move forward over the second half of financial year 23. So yes, there are shorter term challenges, but my sense is that it's really going to still be a secular theme for the next few years.
Hi, Rajesh. Morning. So IT is, one of the stronger themes you're betting on. But do you think, for other sectors, are they adequately, are their margins adequately reflecting the kind of raw material inflation that we have seen of late. Do you think it will come through in this quarter, or do you expect it to further be spread out over the next year?
No, the raw material inflation is quite severe, and you will see that impact of those in this quarter itself. In fact, unfortunately, I think it will flow through to the next quarter as well. And of course, that's why stocks like auto, in cement, consumer staples, etc., have corrected so sharply. So my sense is, yes, inflation will manifest itself in the quarterly results. Pricing, while several companies will take price hikes, I think it may impact demand to some extent. Having said that, what we are liking about this is that there are price corrections in those stocks. So from a risk return perspective, some of these will become more and more attractive. So that's how we are looking at whether we can participate when these things actually come off, because they will become very favorable from a risk return perspective. But to answer your question, the inflation is quite severe, and I think you will see the impact of those in this quarter and the next quarter as well.
Rajesh, what about the private sector financials? They were a favorite sector. It was, at the start of the year, it was a consensus buy for most of the, fund managers that we spoke to, people who managed money. We had such a big mega merger announcement in the HDFC twins. The stocks rallied, a big rally. But then all the gains were unwound in a matter of 4 trading sessions post. And there has been such a sharp underperformance of the likes of HDFC Bank, vis-a-vis and ICICI Bank by nearly about 30% in the last 1 year. What is happening with these individual names and the divergent performance that we are seeing?
I think it's a matter of ownership of these stocks with both FIs and domestics. And I mean, I think we are all noticing the kind of selling that is coming from FIs, which has been unprecedented. Fortunately, it's getting absorbed by domestic investors. Having said that, banks were an overweight for the domestic and FIs alike, and therefore it's resulting in quite a sharp underperformance. I don't think there is anything fundamental that is missing. The fundamental ingredients are there, minus this loan growth or credit growth trajectory, which needs to kind of accelerate. Once that happens, I think banks will be a good play again on the India economic recovery story. So it's a more a technical problem with over ownership and FIs being such large sellers that you're seeing such sharp underperformance of these companies.
All right, Rajesh, thank you very much for joining us and taking us through your call on the market and these individual sectors. We leave it at that today. We'll get into our first short break with that. Up next, we're going to discuss what's going on in the world of commodities. Manisha Gupta will be with us in 2 minutes.